Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, to begin with, the Australian dollar had a very significant bullish week last 5 trading days, and as you can see from the close on Friday, is the market has clearly retreated away from this 60-day moving average, which holds around 73.19. Whether posted long-legged doji does suggest that the market is a little bit hesitant in taking on the challenge to the upside and therefore could see a retreat. And therefore I expect to see the move back towards the lower region of 72 figure 20 and reassess from there. Well, the euro took its challenge to the upside on Friday as the dollar weakened, and as you can see from where this shooting star is, and in fact we've got confirmation from the sell-off and long-legged doji, is that from the price action from July you can see we tested it and rejects the region of 118. With a 60-point close, lower that is, the market could see further weakness into the coming week. We do have the Fed on Thursday at 4 a.m. This could be a bit of a game changer in terms of a weaker euro and a stronger US dollar if the Fed indicates that there is a possible tightening also if they go on Thursday in December. So keep an eye out for this week. Any advances towards the top side again should find resistance around 117.5 to 118. Well, the dollar yen story took a stab at that 112.50-60 level but was rejected after posting a high of 112.87. In lack of weak demand, that is, the market may actually turn around, and if so, could see a potential sell-off back towards the region of 111.80. I still view, and at this case, expect to see further failure to the upside. Well, the pound plummeted on Friday after Theresa May came out and said that there's possibly a no-deal Brexit on the table. The market collapsed from 132.76 down to a low of 130.55, and as you can see here, it's taken out this short-term trend. Keep an eye on the top side at the moment because from the rejection could see a further weaker play, with no safety net in play until 128.40.80. The RSI does support the sell-off, but the MACD is still holding to a bullish case at this present stage. But the ADX is a little bit questioning whether the trend has actually now been depleted. The gold very whipsawed on Friday. It fell, should I say, more to the fact, rejects the point around 1,211.12 and back down towards a target of 1,189 to 91. As you can see from the support, it's still holding and still trading in this sideways band. So nothing really to report, except for the fact we could see some more weakness into this week for gold, purely for the fact is that we do have the FOMC meeting, rate decision, that is, on Thursday. And wrapping up with oil, well, we rejected that level of $71 a barrel again. And as you can see from the rejection, does cast some doubt that the bulls have failed once again and can continue into this week. So therefore I do expect to see the market take a look back to the downside and see the range possibly dropping away from current levels at 70.5 and look more to the fact of around 69.5 and reassess from there. Well, that wraps up for today. Thank you very much for joining me. I hope you have a great start to the new week.